at the end of this video, you're going to be a master at supply and demand. So what you're going to learn in this video is what is supply and demand, how to draw your zones, my two best entries you guys can use to enter the trades, and low versus high probability setups, right? So without further ado, let's just jump right into the video. Okay, so when it comes to supply and demand is just where the big banks have entered in the market, right? So what I mean by that is these major pushes right here: push up again, push down again, push down. What I mean, so basically supply and demand is everywhere on the 1 minute, the 5 minute, 30 minute, the hour, the daily, the monthly, anywhere, everywhere, right? So once you identify those major pushes, you're on the right way to drawing up your zones correctly. And yeah, so once you identify those zones, you're actually looking for a gap, right? If you guys don't know how to identify gaps in the market, I'll show you guys that now, right? So when identifying your gaps in the market, you need to have 3 candles, right? 1, 2, 3, right? And let me just take out, what you guys can do is take out your horizontal ray, right? And at the first candle here at the bottom of the wick, you guys can place your first horizontal, right? You're skipping the second candle here at the third one at the top of it wick, you're placing your second horizontal, right? You guys can see how the top of this here, the top of the candlestick wick here didn't touch this one here, so which is telling us it has a gap in the market and it needs to be filled, right? What it does, it filled that gap instantly, right? So I'm going to show you guys some more examples, right, of some more gaps, and it has been filled, right? So right here, actually I identified this gap here, it needs to be filled, right? So let me just take this tool here, bam, at the first one here, 1, 2, 3, the top of this wick here, the first candle here, right? And at the third candle here, the bottom of it wick there, you guys can see this wick here hasn't touched this wick here or the horizontal line, which is telling us it has a gap in the market. What does it do? It came in full, it came up and filled in that gap, right? So I'm gonna show you guys the next example now. Okay, so right here it has next gap in the market which needs to be filled, right? So 1, 2, 3, bam. So remember at the bottom of this wick here, the first candle, bam, place your first horizontal line, skipping the second one, at the third one at the top of its wick, you're placing your second horizontal, right? This wick here hasn't touched this wick here, right? Which tells us it has a gap in the market, it needs to be filled. What does it do? Fill in that gap, right? I'm telling you, once you learn how to identify these gaps here, which hopefully I just showed you how to do that, right? You should be good, right? And gaps also, identifying gaps using support and resistance also work too, mostly for support and resistance traders, right? So yeah, if you're getting trouble getting profits and stuff, that's why, because guess why, this gap here. So let me just draw a support and resistance, right there should be good. As you guys can see, multiple touches right there. So let me just delete this here. So people, support and resistance traders would have entered right here, and guess what, it would have reversed, go back up, because why? It needs to fill this gap. So all gap needs to be filled. So hopefully you guys, learn from that, and I'm going to show you guys how to actually draw up your zones properly, supply and demand zones properly, right? So okay, so when drawing the zones are pretty easy. So when drawing these zones, it actually has to have these type of major pushes down, right? Either 3, so 1, 2, 3 here, and that should tell us that the zone is pretty strong. So when drawing the zone, the candle before the major push down, right? So you're taking out a rectangle tool at the top of the wick here to the bottom of the wick. That should be your start and stop there, and then you just drag it across, right? So always remember, if this candle here, this wick here, close above here, or it just wicked outside of the zone would have been invalid, and I would have to find a new setup, right? So what I usually look for is rejections like this right here. So which it did, it respected the zone right there. And what you guys can also look for is that you see how this push up right here, that should tell you that's an extra confluence, that gap needs to be filled, right? Once I showed you how to identify gaps, 1 2, so that gap has been filled there, that should tell us that, you know, the zone, I hope it would go down to fill in that gap, right? So with some people, there's 2 ways you can actually enter this trade: is enter as soon as it price touches the zone here, or wait until break of candle, right? Which I would recommend to do. So stops would be above the zone right here, and then you can aim for a simple 1 to 2, bam, smash, take profit, right? Because of this gap, you know this gap needs to be filled. So what happened? It pushes down to fill in that gap. So you would have been out of that trade in about 20 minutes, 5 to 50, right there. So yeah, so I'm going to show you guys some more examples on how to draw up the zones, and you know, yeah. Okay, so here we have another example here, but this example here is a demand, right? So as you can see here, we have a gap in the market, right? So the top of this wick here, and at the bottom here, so 1 2 3, this here, right? You guys can see we have a small gap here, but that gap, remember, our gap needs to be filled. It doesn't matter the size, right? So this wick here hasn't touched this wick here, so that's telling us it has a gap in the market, needs to be filled, right? So let me just remove this here. So at the top of this wick here, we would have drawn our zone. At the bottom, down to there, bam, showing some beautiful rejections there. We would have entered right here. Remember, it's telling us it has another gap in the market, right, which needs to be filled, right, which is another confluence that's telling us price needs to go back up to fill that gap, right? So we would have placed a buy position right there. Stops would have been at the bottom of the zone. We could have aimed for a quick 1 to 2, bam, TP hit. Supply and demand is just very easy, right? But obviously you wouldn't be a master of a strategy within some few weeks, right? But if you actually backtest this, grind this out, actually would master this pretty quickly, right? So I'm going to show you guys some other examples now, and then I'll show you guys some low probability setups versus high probability setups, right? And what the low probability setups could do to you versus the high, right? So let me just jump right into the next example of drawing up your zones and entering the trade. Okay, so right here we have a supply zone. Remember, 1 2 3 created a gap in the market, needs to be filled, right? So we draw it at the top of this wick here, or the candle before the major push down, right? And we just at the bottom of the wick, top to bottom, and we drag it across, right? As you guys can see here, price actually reach up into the zone here to fill in that gap, showed some nice rejections there, right? And what you could have done is just wait for break of candle, right? So break of candle here would have been, what I would have done in this trade here, I would have entered the trade about around here, this break of candle right here, short position right there. I'll enter the trade right there, and then aim for a quick 1 to 2 risk ratio right there, TP smash, right? And another thing too, when you see this here form, don't get scared, right? Or it will go back down to take profit, right? I'm gonna go over low versus high probability setups now. Okay, so when I say high probability setups versus low probability setups, high probability setups is where it have stronger momentum push, right? And low probability setups is when it have like tiny ones, right? So I have a question for you guys. Which setup would you rather take? The high probability where you have a higher chance of getting out at a win, or a low probability where you guys can get stumped out easily, right? So I know some of you guys would have chose the high probability, right? So here's an example of a low probability, right? You see these small pushes, right? You guys could have still got out at a win here, right? But these are not the type of trades I want you guys to take. I want you guys to take the high probability setups where you guys can actually feel more confident instead of taking a trade setup like this than feeling more scared, anxious, and things, right? So that's just a little bit of what I wanted to go over with you guys. So that is actually an in-depth tutorial, a short tutorial on how to do supply and demand trade some entries, and some stuff. And I wanted to give you guys an extra thing, right? When trading supply and demand, there's a few indicators you guys can use, right? It actually has this one called a 200 EMA, right? And also when trading supply and demand, make sure you trade it during your session, right? Do not trade it during like, so okay, so if you're trading NAS 100, please trade NAS 100 during US session, right? Do not trade it during London session or stuff, because New York session is where it will be more, it would have more movement, right, and higher probability settles than the London session, right? So without further ado, make sure you guys smash that like button, smash the subscribe button, and yeah guys, peace out.